Now come to the next question on the topic bills of exchange. This question is related to retiring a bill under rebate. So what is retiring a bill under rebate? When the acceptor ready to pay the amount of the bill before the due date, before the maturity date, before the date of maturity, then drawer may give some rebate to the drawee, to the acceptor. This rebate from drawer point of view, it's an expense. The drawer will debit the rebate account, whereas the drawee, for drawee it's an income. So drawee will credit the rebate account. Okay, so it may happen that sometimes drawee pay the amount to the drawer before the date of maturity. Then drawer may allow the drawee some rebate for payment of the bill before the due date. So we will calculate the rebate on the basis of how many days or month the drawee has paid the bill to the drawer. Accordingly, the rebate will be calculated. Suppose rebate is 10% per annum and drawee has paid the amount 1 month before the due date, then we will calculate the amount of the bill into 10 upon 100, that is the rate of rebate, into 1 upon 12 because it is paid 1 month early. So rebate will be calculated. Okay. Now see one question based on rebate. So the question is, on January 1st, 2017, Ajay sold goods to Balbir for rupees 10,000 at a discount of 20%. At a discount of 20%. This 20% is a trade discount. On that date, Balbir accepted a bill drawn on him by Ajay for rupees 8,000 payable 3 months after sight. Having surplus fund, Balbir paid off the bill on 4th March 2017 and was allowed a rebate of 18% per annum. Saw the journal entries in the books of Ajay and Balbir. Okay, we'll do the entry in the books of Ajay and Balbir. So in the books of Ajay, Ajay is the seller. Ajay is the seller and Balbir is the purchaser. Balbir. So we are going to do the entry in the books of Ajay. Ajay is the seller, he is the drawer. Balbir is the customer, he is the purchaser who purchased the goods and accepted the bill. So Balbir is the purchaser, he is the drawee of the bill, drawee. So as per this question, on January 1st, date is on January 1st, you write the year first, 2017, January 1st. January 1st, Ajay sold goods to Balbir. So Balbir account debit, he is the receiver, Balbir account debit to sales account. Ajay do the entry in his book, Balbir account debit to sales account. Narration will be very simple, being goods sold on credit, being goods sold on credit. So this entry you do it, you must write the narrations in every transactions, every entries you must write the narration. It's very simple. Here the narration will be being goods sold on credit at 20% trade discount. So goods is sold for rupees 10,000. Goods is sold for rupees 10,000 at 20% trade discount less 20% trade discount. So 20% of 10,000 is 2,000. 20% of 10,000 is how much? 2,000. So deduct the 2,000. It means goods is sold for rupees 8,000. So we will do the entry 8,000 over here. 8,000. Is it clear? So being goods sold on credit. So first entry the Ajay will record, means seller will record in his book Balbir account debit. Balbir is the receiver. He comes under the Balbir comes under which account? Personal account. Debit the receiver, and sales is credit. All incomes and gains are credited. Now, on that date, Balbir accepted a bill. On that date, Balbir accepted a bill drawn on him by Ajay. Ajay draw a bill on Balbir, and Balbir accept the bill for rupees 8,000 payable after 3 months. Okay. So on January 1st, bills receivable account debit. When the Balbir accept the bill, it becomes bills receivable. So bills receivable account debit. Bills receivable account debit to who has accepted the bill? Balbir. So Balbir account will be credited. Balbir account. Is it clear? Bills receivable account debit to Balbir account. Balbir has accepted the bill. When the Balbir accept the bill, that bill becomes the assets for the drawer, for Ajay. For that bill becomes the bills receivable for the drawer. So drawer will do the entry bills receivable account debit to Balbir account. Having surplus fund, Balbir paid off the bill on 4th March. March 4, Balbir is going to pay the amount because of surplus fund. Balbir have a surplus fund, and Balbir want to settle this amount before the due date. So due date is what? This bill is of 3 months, and the bill which is accepted or drawn on January 1st, you count 3 months, January to February 1st, February to March 1st, March to April 1st, April 1st, 3 months comes in April 1st, January 1st to February 1st, 1 month, February 1st to March 1st, second month, March 1st to April 1st, 3 months, plus 3 days of grace. So due date is April 4. Here the Balbir is going to settle this amount on March 4, means 1 month before the due date, 1 month before the maturity period, maturity date. And the rate of discount, rate of rebate is 18% per annum. So we will calculate the rebate amount. So 8,000 is the bill amount into rebate is 18% per annum. So 18 upon 100. I am going to what? Calculate the rebate. Rebate is equal to into this bill is paid 1 month before the due date. Due date is 4th April. But here Balbir is going to pay the amount because of having surplus fund the Balbir have. He is going to settle this amount on March 4, 1 month before the maturity period. So he will get the rebate for 1 month because he is going to settle the amount 1 month before the due date. So we will calculate the rebate amount. So it is 120 rupees is the rebate amount. Rebate is 120 rupees. Yes, 120 is the rebate. Is it clear? This one is clear. Rebate is 120. You do this in the working note. You do this calculation where? In the working note. So here I am going to do the entry on March 4, cash or bank account debit, cash or bank account debit. If the amount is received in cash, then cash. If the amount is received by check, then bank account debit. Rebate on bill account debit, rebate on bill, rebate on bill account debit. For Ajay, it's an expense. This rebate for Ajay, for seller, for drawer point of view, it's an expense. So he will debit the rebate account. 2. Bills receivable, bills receivables. 2. Bills receivable account. Okay. So amount will be 120 is the rebate amount. 120 is the amount of rebate. Okay. The bill is of rupees 8,000. So how much amount will come by in cash or by check? The difference 7,880 rupees will come either by cash or by checks. So cash account debit, rebate on bill account debit. This rebate is debited because from drawer point of view it's an expense. 2. Bills receivable goes out. So narration will be being amount of the bill received before 1 month before the due date and allowed the rebate at the rate of 18% for 1 month. Is it clear? This entry will do it in the books of Ajay, who is the drawer. Now same entry will do it in the books of Balbir. Balbir is the purchaser. When the Balbir purchased the goods, he will do the entry in 2017 January 1st. For the Ajay it's a sale, but for Balbir it's a purchase. So he will do the entry purchase account debit, purchase account debit to from whom the goods is purchased? Goods is purchased from Ajay account, or you may only write Ajay as well. So it is 8,000 goods purchased for rupees 8,000, being goods purchased on credit. We will write the narration being goods purchased on credit. Okay. When the Balbir accept the bill, for him it's a bills payable. So he will do the entry Ajay account debit, Ajay account debit to bills payable account, bills payable account. For him it's a liability. When the Balbir accept the bill, the same bill become the liability for the acceptor. The person who draw the bill, drawer for drawer it's an assets, but for drawee it's a liability. So bills payable 8,000. Is it clear? When the Balbir accept the bill, he will write Ajay account debit to bills payable. On March 4, as he has paid the amount 1 month early to Ajay, so he will do the entry bills payable account debit. Bills payable comes in his hand, will return back by the Ajay. Bills payable account debit, he will receive it and he will do the payment to cash account or bank account to rebate on bill, rebate on bill, rebate on bill account will be credited. For him rebate is credited, rebate on bill is credited because for him rebate is an income because he is paying less amount due to this rebate. So bill is of 8,000, rebate is 120, so he will pay 7,880 rupees to Ajay. So the entry will be bills payable account debit to cash account or bank account to rebate on bill. The narration will be very simple, being bill amount of the bill paid to Ajay 1 month before the due date at 18% rebate. Okay, at 18% rebate. So this is the entry in the books of Ajay, and this is the entry in the books of Balbir. Ajay is the drawer, Balbir is the drawee. You can say Ajay is the seller, Balbir is the purchaser. Okay, Ajay is the creditor, Balbir is the debtor. Creditor from which point of view? Ajay is creditor from Balbir point of view, and from Ajay point of view, the Balbir is debtor. The next is noting charges. I am talking about noting charges. What is noting charges? Noting charges. This noting charges means when the bill is dishonored on the due date, when the drawee failed to pay the amount or refused to pay the amount of the bill on the due date, it means the bill is dishonored. This bill is dishonored from the drawee end. Drawee is failed to pay or drawee is refused to pay the amount of the bill who has accepted the bill, and he has refused to pay the amount of the bill on the due date. It means bill is being dishonored. If the bill is dishonored, the next step after the dishonor of the bill, drawee may proceed further. Legal procedures. What is the legal procedure? Legal procedure, drawee go to the court and handed over this bill to the notary public. Notary public is appointed by the court. Okay, appointed by the court. The bill is given, the drawer will present the bill or hand over the bill to the notary public. Notary public, once again, notary public is a lawyer. Once again, he will approach, notary public will approach to the drawee for payments. He requests the drawee to do the payment once again. And if again the drawee refuse to pay the payment, whatever the reasons may be, he noted down that reasons in the bills of exchange. That noting is called, that whatever the notary public note down in the bills is called noting, and for that notary public charges some amount to the drawer. Okay, that amount which is charged by the notary public is called noting charges. Noting charges is paid by the holder of the bill, the person who have the bill at present. On the date of dishonor, the holder of the bill will pay this amount, but this amount of noting charges will be realized from the drawee, because drawee is responsible for the dishonor of the bill, so it's an expense of the drawee. It's an expense of the drawee, so noting charges account debit will be done by the drawee end, and whosoever is the holder of the bill, who will pay the amount of the bill at present, but at last or finally this amount will be realized from the drawee. Is it clear? So noting charges, which is paid to the notary public for noting the statement of the drawee regarding the dishonor of the bill in the bills of exchange. Notary public is a lawyer appointed by the court. Is it clear? So note expense from the drawee point of view, but it's not an expense from the drawer point of view or from the holder point of view. Whosoever the holder, that holder may be the bank, that holder may be the endorsee, holder may be the drawer himself. So they will pay the noting charges at present to the notary public, but finally this amount will be recovered from the drawee. Okay. Now we'll see one question based on noting charges. Now come to one question which is based on noting charges, So the question is, On April 1st, 2016, B accepted a bill drawn by A. B accepted a bill means B is the drawee. B is the drawee. B accepted a bill. He is the drawee of the bill. He is the drawee. B accepted a bill drawn by A. Okay, drawn by A. So in the books of A is the drawer. A is the drawer of the bill as per this question. On 1st April 2016, B accepted a bill drawn by A at 3 months for rupees 8,000 in payment of debt. On the due date, the acceptance is dishonored and A get the bill noted paying rupees 100. A get the bill noted and paying rupees 100. A draws a new bill payable after 73 days provided interest is paid in cash at the rate of 15% per annum. To this bill, B is agreeable. B is ready. The bill is met on maturity. So we'll do the entry in the books of A. Who is A? A is the drawer of the bill. And who is B? B is the drawee, acceptor of the bill. So in 2016, date is April 1st. So when the bill is drawn over the drawee and drawee accepted, for drawer it's a bills receivable, account debit, bills receivable account debit to B's account, being bill accepted, drawn and accepted by drawee. So narration will be very simple, being bill drawn which is accepted by drawee. The amount of the bill is 8,000. This bill is of 3 months. The bill is of 3 months. So we'll calculate the 3 months from here. So 3 months, April 1st to May 1st, 1 month, May 1st to June 1st, June 1st to July 1st, 3 months is completed plus 3 days. Means July 4 is the date of maturity. Due date is July 4 because bill is of 3 months. April to May 1 month, May to June 1 month, June to July, July 1st plus 3 days of grace. So July 4 is the date of maturity. On this date the bill is dishonored. So in dishonored, what we will do, we will cancel this entry of bill which is recorded by us when the drawee accept the bill, and we have recorded this entry. This entry will be cancelled. In case of dishonor of the bill, this entry will be cancelled. So what we will do, we just reverse this entry. Reverse it. B account which is credited over here, we will debit the B's account. B's account will be debited by us, and bills receivable which is debited over here, this will be credited by us. Bills receivable will be credited. This is the cancellation entry. Dishonor entry means entry of cancellation of the bill which is recorded earlier. The bill which is recorded earlier, bills receivable to be, this entry will be cancelled because bill is dishonored. So we will do the reverse entry, just reverse entry, revert it. Okay, and here the noting charges is paid. So to cash account for noting charges, So amount of the bill is how much? Amount of the bill is 8,000 and noting charges is 100 rupees is the noting charges. So it is 8,100. It is how much? 8,100. So narration will be being billed dishonored and noting charges rupees 100 paid. Is it clear? Narration is very simple. Being billed dishonored and noting charges rupees 100 is paid. Thereafter, draw a new bill payable after 73 days. The new bill is drawn because first bill is cancelled. New bill is drawn after 73 days, provided interest is paid in cash at the rate of 15% per annum. So interest is paid. So for that day interest is paid. So interest is the income for the drawer. So cash account debit, he has received the amount of interest. So cash account debit to, for him it is an income, interest will be credited. He has received this amount. You see the sentence, on 4th July 2016, A draws a new bill payable after 73 days, okay, provided interest is paid in cash at the rate of 15% per annum. To this B is agreeable, means B is ready. The bill is met on maturity. So we'll calculate the interest on this amount. So amount of the bill is how much? Now it is new one is 8,100 after adding the interest. Okay, after adding the noting charges it is 8,100 into rate of interest is how much? Rate of interest given in the question is 15% per annum. And the extension is for 73 days. So 73 upon 365. 365. Okay, 365. So we'll calculate the interest. So 73, this is 5, 300, 3, 0, cancel 0, sorry, 3, 24, 243 is the interest. This is what? This is interest. You calculate this interest in the working note. You calculate this interest in the working note. Okay, in the working note it is 243 is the interest amount. 243 is the interest amount. You do this calculation where? In the working note, not here, in the working note. Okay, so 243 is the interest. Now after 73 days there is a renewal of the bill on July 4. Bills receivable account debit, new bill to B's account, new bill for rupees 8,100 including noting charges, because interest is paid. That interest amount is not added to this because interest is already given by the drawee in cash. So in the new bill the amount of the bill plus noting charges will be added. So 8,100. On the due date, this bill is of 73 days. This bill is of 73 days. So we'll calculate the 73 days from here. From July 4 to 73 days we will go. So in July, this is the July, remaining days in July is how much? July is of 31st. So remaining days in July is 27 days. Yes. August is the next month, is of 31 days. So total is how much now? 58. Now September, 73 days. Okay, total is 73. So it is 5, 1, 15 days. So 73 is completed. 73 days. September 15 plus 3 days days of grace. So it is 18. So September 18 is the due date. So on September 18, the bill is met on maturity. So cash account debit or bank account debit to bills receivable account, to bills receivable account. This bill is, amount of the bill is received on the due date. Due date is September 18. It is of 73 days. New bill is of 73 days. So start calculation from 4 July onward. In July the remaining days is 27 days. In August is of 31 days. It is 58. So remaining 15 days we will add 15, then it is 73. 15 plus 3 days of a grace period is 3 days. So September 18 is the due date. So is it clear? So you calculate this in the working note as well. You calculate the due date in working note, supporting notes. Now in the books of B 2016, the first entry he will do on April 1st when he accept the bill. So he will write A account debit, A's account debit to bills payable account, to bills payable account. He will write the narration being bill accepted, which is drawn by A. Next on July 4th, on the due date, when he has refused to pay the amount or bill is dishonored on the due date, he will do the cancellation entry. So bills payable which is credited over here, this will be debited to for cancellation, and A which is debit over here, this will be cancelled and A account will be credited. This is the cancellation entry. This entry is cancelled. How it is cancelled? Just we have done the reverse entry. Bills payable which is credited over here, it is debited. A's which is debited over here, it is credited over here. And noting charges is the expense of the drawee expense. So noting charges will be debited. Noting charges will be debited. Noting charges is the expense for the drawee. So he will do the entry. This is the entry of 8,000. So 8,000 is the bill amount, noting charges is 100, so it is 8,100. Okay. So narration will be, what we will write in narration? Being bill dishonored and noting charges paid by the holder. Okay. Next on July 4, interest. Interest is the expense for him, so we will write interest account debit when he pay the interest for the renewal of the bill for 73 days. So that interest is the expense for the drawee. So we will write interest account debit to A's interest account debit to interest is paid, interest account debit to cash account. Interest we have already calculated 243. Being interest paid for the extension of the bill for 73 days at the rate of 15% per annum. Next is on new bill is accepted, so he will write A's account debit to bills payable. New bill is accepted. So new bill is of 8,100. Amount of the bill plus noting charges, amount of the bill plus noting charges, these two will be added and new bill is drawn. New bill is accepted. So he will write in narration being new bill is accepted, okay, including noting charges rupees 100. Now on the due date on September 18, he will do the entry on September 18, bills payable account debit to cash account. Bills payable account debit to cash account on the due date 8,100. He has honored the bill on the due date. Second bill is duly honored by the drawee on the. So he will do the entry on September 18. Bills payable account debit to cash account or to bank account. Okay. So these entries are clear. There are 3, 4, 5 entries are here, and that side is also 5 entries. Okay. Now we'll see the next question. Same type of question. Here is the noting charges, dishonor of the bill, then renewal of the bill with interest. Okay, and here the case is when the bill is discounted. So the question is, A sold goods for rupees 30,000 to B on January 1st, 2017. On the same day, draws a bill on B at 3 months for the amount. B accept it and return it to A. Who discount this bill on 4th February 2017 with his bank at the rate of 18% per annum. The acceptance is dishonored on the due date. The due date the bill is dishonored. Noting charges paid by the bank being rupees 200 as the bill is dishonored. Bill was discounted, so bill was in the hand of the bank, so bank will pay the noting charges. Whoso may ever the holder of the bill on the date of dishonor of the bill, that person will pay the noting charges. So bank will pay the noting charges. So here the noting charges paid by the bank being rupees 200. On 4th April 2017, B accept a new bill at 2 months for the amount then due to A together with interest at the rate of 12% per annum. Make journal entries in the books of A and B both. So start with the A in the books of A. In the books of A. A is who? A is the seller. A is the seller. And who is B? B is the purchaser. B is the purchaser. B is the purchaser. Or you can say B is the drawee as well, because B has accepted the bill. A is the drawer, B is the drawee. A is the seller, B is the purchaser. So A sold goods for rupees 30,000 to B on date is given on 2017 January 1st. So B account debit, B's account debit to sales account. This is the first entry in the books of A, to sales account. Being goods sold on credit. Narration will be being goods sold on credit. So amount is 30,000 is the amount. Goods sold on credit. So what we will write in narration? Being goods sold on credit on January 1st. Okay, this is the first entry in the books of A. Who is A? A is the seller. A is the drawer as well. On the same day, draws a bill on B at 3 months for the amount and B accept it. When the B accept this amount on January 1st, for him it is a bills receivable. Bills receivable account debit to B's account. B has accepted the bill which is drawn by A. So narration will be being bill drawn over the B which is accepted by him. Okay, being bill drawn over the B for 3 months which is accepted by him. This will be the narration. So 30,000. When the bill is accepted by B, for A it is a bills receivable. Next entry is who discount it on 4th February. On February 4, this bill is discounted by A. A has discounted this bill. So entry will be bank account debit, discount account debit to bills receivable. 2 bills receivable. This bill is discounted with the bank. Discounted with the bank at 18% per annum. Who discounted with the bank at 18% per annum. So we'll calculate the amount of discount in the working note. So I am calculating this discount in the working note. So amount of the bill is 30,000. Rate of discount as mentioned in the question is, it is 18% per annum. 18% per annum. Okay. So bill is of 3 months, drawn on January 1st, is of 3 months. Its due date will come when? Its due date will the due date will be January to February 1st, February to March 1st, March to April 1st, plus 3 day April 4. April 4. So April 4 is the due date. April 4 is the due date, because bill is of 3 months. Okay, and this bill is discounted on which date? February 4. So how many months before the bill is discounted? February to March, March to April. 2 months before the due date, the bill is discounted. 2 months before the due date, the bill is discounted by the drawer. So discount will be calculated for 2 months only, not for 3 months. Bill is of 3 months, but after 1 month the bill is discounted, January 1st to February 4th. So and the due date is April 4. Bill is of 3 months. So how many months before or days before the bill is discounted? So February 4 to April 4, you do the calculation. February 4 to March 4, March to April 4. So 2 months before the bill is discounted. So discounting will be calculated for 2 months only. So it's a 900 rupees is the discount amount. So 900 is the discount, 30,000 is the bill amount. So 29,100 will be in the bank account. So bank account debit 29,100, 29,100. Discount account 900, discount account 900, and 2 bills receivable 30,000. Is it clear? 30,000 bills receivable. So this calculation you do it in the working note. So this one is clear. So bill is discounted 2 months before the due date. So discount will be calculated for 2 months only. The acceptance is dishonored on the due date. This acceptance is dishonored on the due date means on April 4, this one is dishonored. Bill is dishonored. So what we'll do? We'll cancel these 2 entries. The entry of this bill and when the bill is discounted. These 2 entries will be cancelled by us. We are going to cancel these 2 entries. So bills receivable and bills receivable is already cancelled. Bills receivable is debit, bills receivable is in credit by 30,000. It is already cancelled. Now we have to cancel the B account. So B's account will be debited, and to cancel the bank account, to bank account. Discount is not going to cancel because the bank will take the discount. Discount is not going to cancel, but discount amount will be added to bank account. Okay. So this is the entry of cancellation. This is the entry of dishonor, means entry of cancellation. So it is dishonored, and noting charges paid by the bank. Here the noting charges is paid by the bank because bank is the holder of the bill on the due date. So the entry will be 30,200 including noting charges. Including noting charges. Noting charges is paid by the bank. So I will credit to bank account including the noting charges, and this will be added to the B's account, because this amount we will finally take from the B. We will finally take from B because B is responsible for the dishonor of the bill. Is it clear? On 4th April, B accept a new bill at 2 months. On 4th April, B accept a new bill, means it's a renewal of the bill for 2 months. Then due to A together with interest. Together with interest. So first of all, we will calculate the interest. For him, interest is the income. So he will write B's account debit to interest account. B's account debit to interest account. He will credit the interest because from drawer point of view, from A's point of view, interest is the income. So next calculation in the working note is related to interest. So interest will be calculated on 30,200 on this amount, bill amount plus noting charges, will add it into interest rate is 12% per annum, 12% per annum. And the renewal of the bill is for how many days? Bill is renewed for 2 months. So we'll calculate the interest for 2 months. 2 months. Okay. So it is 604 rupees is the amount of interest. 604 is the amount of interest. Now the new bill will be April 4, bills receivable account debit, bills receivable account debit, okay, to B's account 30,200 plus 604. So new bill will be 30,804 rupees. 30,804 rupees means amount of the bill plus noting charges 200 plus interest. So total amount is 30,804 is the amount of the new bill. So the last paragraph is on 4th April 2017, B accepted a new bill at 2 months for the amount then due to A together with interest at the rate of 12% per annum. Make journal entry. Thereafter it has not given whether this bill is honored or dishonored. So we have to do the entry up to this renewal of the bill. Maturity, honor of the last bill is not given, so we will do up to this. Now come to the B's account, purchaser account, drawee. B is the drawee. So for him it is a sales. So for drawee, for the purchaser, the same entry what the drawee will pass on January 1st, purchase. So purchase account debit to seller's account. Who is the seller? A is the seller, to A's account. This is the first entry. 30,000. Amount is 30,000. Is it clear? Amount is 30,000. So purchase account debit to A's account. This is the first entry on January 1st. The drawer has done B account debit to sales account. So drawee will done purchase account debit to A's account. Now coming to the next. When the drawee accept the bill, he will write A's account debit to bills payable account. For him it's a liability. When he accept the bill, it's a liability. And this bill is discounted. So drawee is not going to do the entry for discounting of the bill. He is not at all related to that. What the drawer has done the entry bank account debit, discount account debit to bills receivable, this entry is not going to do by the drawee, because drawee will pay the amount the person who will come with the bill. What the drawer is doing with that bill is not at all concerned to the drawee. He is not at all interested to know what the drawer is doing with that bill. So whosoever come with the bill on the date of maturity, to that person the drawee will make the payment, will do the payment. So next entry will be dishonor of the bill. He is going to dishonor the bill on April 4 on the due date. When he dishonor the bill, he will cancel this entry, cancellation of this entry. So bills payable will be debited, which is credited in the previous, and A's which is credited, that will be A's which is debited, that will be credited by him, A's account. And noting charges is the expense for him, so he will write noting charges account debit. So bills payable account debit, bills payable account debit, noting charges account debit to A's account. So amount of the bill is 30,000. Noting charges is 200. So it is 30,200. 30,200. He will write in the narration, being bill dishonored on the due date and noting charges paid on it by the holder rupees 200. Next, on the renewal of the bill process is start. So for him interest is the expense. So he will write interest account debit. Interest account debit. For him it's an expense to A's account. To A's account. So interest already we have calculated. Interest is 604 rupees is the amount of interest. We have already done the calculations. Okay. Now the new bill will come. Bills A's account debit to bills payable account, and in this new bill, amount of the bill plus noting charges plus this interest. So 30,804. 30,804. Amount of the bill plus noting charges plus this one interest. The new bill will come. So A's account debit to bills payable. So what you will write in narration, being new bill accepted along with the interest and noting charges. Okay, here the narration will be, being interest is allowed for the extension of the bill for how many days? For 2 months. Okay, interest is allowed on the extension of the bill for 2 months at the rate of 12% per annum. So the entry is clear in the books of A and in the books of B. Now see one question based on dishonor of the bill. Okay, based on dishonor of the bill in case of endorsement. So on March 4, question is on March 4, 2017, A purchased from B goods rupees 50,000. So A purchased goods means A is the purchaser. A is the purchaser. He is the purchaser. A purchased goods. A is the purchaser and B is the seller. Here B is the seller. So A purchased goods from B for rupees 50,000. A paid 40% immediately and for the balance gave a promissory note to B for 30 days. B immediately endorsed the promissory note in favor of his creditor C for the full settlement of a debts of 31,000. On the due date, the bill was dishonored and C paid 100 as noting charges. C is the holder of the bill. On the same day, C informed B about the dishonor of the bill. B settled his due to C by check for rupees 30,100, which include noting charges. A settled the B's claim by check for the same amount. Past journal entries in the books of A, B and C means drawer, drawee and payee. Drawer, drawee and endorsee. For the above transaction, prepare A's account and C's account in the books of B and B's account in the books of A and also B's account in the books of C. So start with this in the books of B. B is the seller. So first entry is A purchased goods from B. It means B is the seller. So he will write A's account debit to sales account. To sales account. To sales account. Sales is how much? Sales is of 50,000 is the sale amount. Out of that, 40% he has paid immediately. So he will get cash account debit. Cash account debit. Cash account debit. Okay, cash account debit A's account debit to sales account. So 40% amount immediately paid. So 40% of 50,000. 40% of 50,000. So it is how much? 20,000. So 20,000 received in cash. 20,000 received in cash. 20,000 received in cash. It means 30,000 is on credit. 30,000 is on credit. This entry is clear? Cash account debit, A's account debit, cash account debit to sales account. Sales is 50,000. Out of that, 40% amount is paid by A immediately. So it's a cash sales. 40% is the cash sales. So remaining is credit. Remaining is how much? 30,000 is the credit. So this is the entry done on which date? 2017. March 4. Next is for the balance gave a promissory notes. For the balance gave a promissory note. So bills receivable account debit to A's account. To A's account. For balance gave a promissory notes. So promissory notes will be of 30,000. Okay. B immediately endorsed the promissory notes in favor of his creditor C for the full settlement of debts of rupees 31,000. So B immediately endorsed these promissory notes to whom? To C. So C's account debit 31,000 to bills receivable 30,000. In full settlement means it's a discount received. Discount received. Discount received account is how much? 1,000 is the discount received, because in full settlement of 31,000, B has given a bill of rupees or promissory note of rupees 30,000. In full settlement, what is used? B immediately endorsed the promissory note in favor of creditor C for the full settlement of debts. So it means 1,000 is the discount received. On the same date, C informed B about the dishonor of the bill. On the due date, the bill was dishonored. On the due date, bill was dishonored. Due date comes on which date? Due date will be, the bill is of 30 days and it's a March 4. So we'll calculate the due date. March 4 is the acceptance date. Bill is drawn. So in March, how many days left in March? In March it is 27 days left. March is of 31st. April 3 days. So it's a 30 days plus 3 days for days of grace. So April 6 will be the date of maturity. Date of maturity, due date. In this date, the bill is dishonored. Okay, in this date, the bill is dishonored. So we'll cancel the entry. These two entry will be cancelled. These two entry which is related to bill will be cancelled. So bills receivable 30,000 debit and bills receivable 30,000 credit is already cancelled. So we have to cancel the A's account will be debited. A's account will debit. And we'll cancel the C's account. C's account will credit. C's account will be credited. C's account will be credited 31,000. Discount received will be cancelled. Discount received will also be cancelled, because when the bill is dishonored, so discount received will be cancelled. Discount received account will be debited, which is credited earlier by 1,000. This will be cancelled. Okay. And here the noting charges is paid by whom? On the due date, the bill was dishonored and C paid rupees 100 at noting charges. How much noting charges is? 100 rupees is the noting charges. In C's account, I will write 31,100. So here in A's account, it is 30 30,100 in A's account. This is the entry for dishonor. C's account will be cancelled, including the noting charges. Discount will be cancelled, okay, and A's account, this entry, this amount will be cancelled by debiting. Bills receivable and bills receivable already cancelled in these two entry. So this is the entry for dishonor. Okay, on April 6th, we will do the entry for dishonor this way. Okay. Now see in the books of A. See the entry in the books of A. A is the purchaser. So on 2017, March 4, on March 4, he will do the entry purchase account debit to cash account to B's account. So purchase account debit 50,000 is the purchase amount, to cash account 20,000 he has paid, and this is the credit purchase to B's account. B is the to B's account. Is it clear? To B's account. Next entry is on March 4. On March 4, he has accepted a bill, so B's account debit to bills payable account. Bills payable is of rupees 30,000. This amount, bills payable 30,000. He will not do the entry for the endorsement of the bill. The B has endorsed the bill, so drawee or purchaser, drawee is not at all concerned with that, so he will not do the entry for this. Now he will do the entry for dishonor of the bill on April 6. He will pass the entry for dishonor, so this entry will be cancelled, so bills payable which is credited over here will be debited 30,000. Noting charges will be debit because the bill is dishonored because of the drawee, so noting charges account debit, it's an expense of the drawee. To B's account will be cancelled, so B's account will be credited. Here the noting charges is 100 rupees, so this is 30,100. 30,100. Is it clear? 30,100 for the dishonor of the bill. Bill is dishonored. Okay, bill is dishonored. After dishonor, you see the third line. On the same day, C informed B about the dishonor of the bill. B settled his debt to C by check of rupees 30,100, which include noting charges. A settled B's claim by check for the same amount. A settled B's claim for the same amount. So B settled his debt to C. So C's account will be debited. 31,000 is the amount of C. 31,000 to cash account. Okay. This is C's account is credited with 31,100, so 31,100 to cash account 30,100 to discount received. Is 1,000. Discount received is 1,000. And here in case of A, it has mentioned A settled B's claim by check. A settled B's claim by check. So on April 6, B's account debit to cash account, B's account debit to cash account 30,100. 30,100. B's account is credited with the 30,100. So here B's account will be debited 30,100 to cash account. Okay. A settled B's claim by check for the same 30,100. Okay. Now we'll do the entry in the books of C as well. In the books of C, first of all, we see the journal ledger of A's ledger in the books of B, ledger of A in the books of B. Okay, ledger of A in the books of B. Before that, we have to see what entry will pass. Now we see what entry will pass in the books of C. C is the indoor C. In the books of C, in the books of C, in the books of C. Now see in the books of journal entry in the books of C. Okay. So he will get when he has got the bills receivable account debit, date is on March 4, 2017. Bills receivable account debit, discount allowed account debit to A's account. Sorry, to B's account. He has received the bill from B to B's account. So 30,000 is the amount of the bill, 1,000 is the discount allowed. On April 6, when the bill is dishonored, April 6, so the entry will be B's account debit to bills receivable to discount allowed is cancelled, to cash account for noting charges. So bills is 30,000, this is discount is 1,000, and your noting charges is how much? Noting charges was 100 was the noting charges. Okay, noting charges 100. So it is 31,100. And on April 6, finally he has got the amount, cash account debit to B's account, cash account debit, discount allowed account debit